Crypto's bear market is looking like a buying opportunity for some professional and wealthier investors. According to an annual survey from Fidelity Digital Assets, 58% of institutional investors bought crypto in the first half of this year, even as Bitcoin fell almost 60%. That total was up 6 points from the same time last year. And about 74% say they plan to invest in crypto in the future. High net worth buyers really drove those results. Almost half of those surveyed say they now own crypto. Financial advisors were the next biggest group. Pension funds and endowments still have the lowest allocation. They tend to be by far the most risk averse. And the top reason for buying, more than 40% see crypto as an asset with high potential upside or as an innovative tech play. And despite its correlation with the NASDAQ and QQQ, a quarter of these institutional investors are still betting on crypto as something that they call uncorrelated to other assets. I asked the head of research for Fidelity Digital Assets about this. He says some of these clients tend to be those long-term investors who are willing to wait for those use cases to play out.
The people who come along in this journey, who really put in the work to understand this value proposition, to understand how it works, they're the ones that are thinking about it more tactically and using this as an opportunity to perhaps take a position or add to a position. So they're not the ones that are looking to trade on news or sentiment or price action, but to really build that core position. And of course, now is a lot more appealing than a few months ago.
The biggest barrier to entry, half of respondents still say it's price volatility. They also mention lack of fundamentals to figure out the value and security, although not as volatile as Meta or these tech stocks lately.
No, it's not. What's interesting, though, is, a lot of them said that they still see it as a store of value. I mean, is that just what Bitcoin is now? There was, we've always talked about where you can use that if you're actually going to be able to use it one day, and it doesn't feel like that's coming into the equation even now.
It's really interesting. I heard the best analogy on this yesterday. Like, it's like looking through a prism where you can look at the exact same thing and see a different color on one side. So you've got some institutional investors saying this is just a high beta tech play. You've got some more on the philosophical libertarian side who say this is a long-term store of value because it's free from government intervention. And then you've got some of the early crypto believers or people who think it's going to be used as payment. So there really is no consensus so far on what it should actually be used for. And that's one of the reasons, as institutions get in, it has been trading more like a tech name, because they treat it that way in their portfolio. They are now one of the biggest cohorts, and some of the long-term holders are using it in that use case. But it'll be interesting to see if it does emerge or prove out that use case.
It can be like everything to everyone or nothing to no one, exactly. Is what I'm hearing, which has always been the case.
Yeah, we'll see. And a lot of these investors have potentially a 10-year, if not multi-decade time horizon.
Okay, Brittany, thank you.